If anyone has shaken up corporate America significantly for the past half-century, that person is Carl Icahn. According to Fortune magazine, no investor makes more money for shareholders on the planet than Carl Icahn. Icahn, one of Wall Street's most revered and successful investors, operates like none other, and his distinctive investment strategies have earned him the popular nickname, the King of Corporate Rating. Now more popularly addressed as America's foremost activist investor, Icahn is a proven conqueror and corporate America remains his territory. In this video, we've detailed the journey to greatness of this legendary investor, his unique investment strategy, and the top 10 investment tips from the iconic Carl Icahn. If you're adamant about creating generational wealth, this video is all you'll ever need to watch, and these tips are just the ones you'll need to apply. Carl Icahn is undoubtedly one of the bravest and brightest minds Wall Street has ever seen. Largely accused of being a controversial figure for his rather brute methods, Icahn has stuck to what he does best, and his investment strategy and philosophy have remained unchanged for years. All through his formative years, Icahn had a uniquely powerful sense of reasoning and learned to own his thoughts and opinions. Unknown to him, these would be the very traits that had set him on the path to becoming one of America's greatest investors ever. But before we dive into Icahn's remarkable investment strategies, it'd be crucial to take a look at his early years as an investor to understand just how this Wall Street maestro mastered the act of investment and honed his wealth-creating strategies. Icahn began his Wall Street career as a stockbroker with Dreyfus Corporation in 1961. He'd move on to become an options manager at Tessel, Patrick & Co. in 1963, and by 1968, he'd buy his seat on the New York Stock Exchange, using $150,000 of his own money he'd saved up with an additional $400,000 investment from his uncle. This was the beginning of his maiden company, Icahn & Co. He'd start by focusing on risk arbitrage and options trading. Although Icahn & Co. was still small, it quickly grew a reputation as a successful discount options brokerage with a specialty in arbitrage. Icahn's sheer brilliance greatly aided him in wrapping his head around complex transactions. This rare attribute would prompt him to begin engaging in convertible arbitrage, a very rare and uncommonly done variation of arbitrage at the time. Icahn actively used his superior knowledge of the market to capitalize on inefficiencies between the prices of common stocks and their warrants or the convertible debt on these stocks. He'd soon realize that convertible debts were indeed more attractive as they were market-neutral investments, implying that he would not be subject to the risk of a steep decline in the market. He'd soon progress to arbitraging closed-end mutual funds, as well as the securities in the underlying portfolio. These closed-end funds were often traded at a significant discount, and as such, had a premium net asset value. Like with the convertible arbitrage strategy that he had earlier perfected, arbitraging closed-end funds was similarly indifferent to the direction of the market. The arbitrage of closed-end funds generated even more profits, especially as the gap between the unit price and the underlying value of the fund narrowed. Icahn's knowledge of the market had become even more advanced, and he became increasingly unwilling to wait for the market to close the gap. Once he'd established his position, he'd lobby to have the fund liquidated, thereby effectively taking matters into his own hands and setting precedents in the market. Fund managers were often forced to accept this situation, and Icahn would close out the position for bumper gains. Icahn's brilliant strategy consistently generated good returns, and soon, he had his eyes set on even bigger prospects. Icahn began to identify opportunities in public companies with large undervalued assets. This new strategy that Icahn had conceived was essentially what would become known in the American and global investment lexicons as corporate rating, especially as he began his series of unprecedented hostile takeovers. While many Wall Street investors were occupied with debating the legitimacy and morality of Icahn's rather unusual investment strategy, the tireless investor already had his mind set on revolutionizing corporate America as it was. A revolution was fast brewing in the American stock market, and Icahn was its chief engineer. After what was indeed a long and turbulent decade for the stock market in the 1960s, Icahn was quick to spot a truly rare opportunity just as it sprung up in the market. It became evident to the now notorious investor that deeply discounted stocks would continue to fall with the market, especially after the tough decade. So Icahn quickly took a position on the stocks of several companies with highly undervalued assets. Icahn knew that he didn't need to rely on the market to close the gap between price and the intrinsic value of the undervalued assets of these affected public companies. He was hell-bent on becoming an activist in American corporations with an even larger pool of undervalued assets. By 1976, Icahn had become a full-blown corporate raider and was aggressively orchestrating the hostile takeover of some of America's most reputable corporations. First, Icahn sought to provide his unique solution to the principal agency dilemma of old corporate America. He'd write out his investment memorandum and get the document distributed to all shareholders of companies he targeted for a takeover. These documents would soon come to be known as the Icahn Manifesto. He'd first put this strategy to use in 1978 by acquiring a controlling stake in Tappan, before forcing the sale of the company to Electrolux. From this deal, Icahn essentially doubled his investment, making a decent $2.7 million in profit. After acquiring Bayswater Reality and Capital Corporation in 1979, he'd additionally acquire ACF Industries in 1983, before selling off his stake in both companies for a whopping gain of $50 million in 1985. Icahn had become widely feared by now, and many of America's top corporations were actively beginning to devise ways of protecting themselves from the cruel corporate raider. But this still wouldn't stop Icahn from securing his first high-profile raid. Still, in 1985, and after his recent bumper gains, he'd acquire 50% of Trans World Airlines, which was one of the world's biggest aviation companies at the time. He'd then succeed in making himself chairman and took the company private in 1988 in a leveraged buyout. After this very bold move, he'd begin to gradually sell out TWA's assets so he could repay the loans he took that enabled him to acquire such a large stake in the company. By the time he was done, he'd made a staggering $469 million in profits and left the company indebted to the tune of $540 million. Poorly managed corporations that felt they could be targeted next by Icahn started going overboard to avoid this situation. These companies evolved the concept of greenmails, where if they felt they were being targeted by the bloodthirsty raider, they'd quickly pay him a ransom of sorts by buying back his stake in the company at a premium to the market price. Icahn would go on to make a great deal of money through windfall earnings that accrued from greenmail from many of America's top corporations. The practice would subsequently be banned, but Icahn would have earned his billions already. He'd make history again for making a transaction that remains the largest share sale to date in the history of the New York Stock Exchange. This was after he sold his stake in Texaco for $2 billion in 1989, a deal in which he made a cool profit of $700 million. For well over 3 decades now, an increasing number of Wall Street investors have been actively following Carl Icahn's lead and buying into whatever company the legend was investing in. A phenomenon known as the Icahn lift has since evolved from this trend. This phenomenon accrued from the general tendency for the stock price of companies that Icahn was buying into to appreciate considerably, owing to the anticipation that the iconic raider would spearhead changes that would uncover shareholder value. Most recently, the Billionaire acquired stocks worth $3.6 billion in Apple Inc. in 2003 and 2004 respectively. After holding the stocks for 32 months, he began to mount immense pressure on the Apple board and the company's CEO to initiate a massive share buyback. By 2016, Apple had aggressively bought back $116.6 billion of its shares, jacking up the company's stock price and resulting in capital returns to the tune of $36 billion paid out as dividends to shareholders like Icahn. After making huge gains from dividends received, he'd then clear out his stake in Apple, making $2 billion in profit for his clever outlay. Icahn's fortune has continued to grow, and the billionaire now has a personal net worth of over $16 billion thanks to his ingenious investment strategy. Still actively investing, Icahn has regularly spoken about his rather unusual investment strategy and the underlying philosophy behind it. From Icahn's very own lips, here are some of the Icahn's top investment tips. Number 1. Buy stocks when everybody hates them. Number 2. Learn from losing money to the market. Number 3. Choose a company that's poorly run and trading below value. Number 4. Invest for the long term and be a value investor. Number 5. Avoid the 2 cardinal sins of investing: acting impulsively and not acting at all. Number 6. Thoroughly study a business's potential and focus on its pricing power. Number 7. Never follow the herd. Own your thoughts and investment decisions. Number 8. Bet big on your best ideas and be an active investor. Number 9. Enjoy your investment journey. Be highly flexible and adapt quickly to situations. Number 10. Invest to own a business and not just for the earnings. As always, make sure to give this video a like and hit that subscribe button. Do leave us a comment as well, as we'd love to read your opinions on this legendary investor. You'll also want to turn on your notifications for our next upload, where we'll be elaborating on each of Icahn's solid investment tips, as well as for more updates on intriguing stories about global finance and investing.